it's good to be back. We took the summer off, but we did do something pretty cool. We updated our website. So go to askstrategicadvisory.com to check it out. It's a lot of the same information, but we've tried to clean it up a little bit, put it in a little bit more user-friendly format. We'd love to hear what you have to think about it. So now that we're back, let's start with the big economic news, which remains inflation. Unfortunately, it's still a problem, while it's getting a whole lot better though. So we've had a couple inflation pieces of news come out in the last few days. Number one, CPI, the Consumer Price Index, which is probably what's most reported, as we've talked about many times, was up. And that's bad news because it's been going down and now it's ticked up a little bit. Well, it ticked up because of oil prices. Oil prices have climbed substantially, 27% since June, and that has led that Consumer Price Index upwards. Now, here's the good news in that. The core CPI, which is removing energy and food prices, which is what the Fed probably tracks most closely, went down from last year. And so that's really good news for people hanging on bated breath for next week's Fed meeting. Not really, I'm sure you're not. But next week's Fed meeting, they're going to announce whether or not they're going to increase, keep them the same, or lower interest rates. Most believe they're going to keep them where they are. Now, the Fed has made it clear they're going to raise rates at least one more time before the end of the year. So we're not out of the woods yet, but as you might have noticed, the stock market has calmed this year. It's up in most areas, and we're hopefully at a much better place economically than we were a year ago. And for long-term investors, that's good news. Your patience was worth it. If you're a short-term investor, as I always say, good luck. It's very hard to predict the stock market. So that being said, I want to go through just a couple of interesting items if you're still with us on this video. So looking back a year, what particular items within the economy grew or increased the most in prices and what decreased the most? And so, believe it or not, it has become a whole lot more expensive to drive your car. Insurance, motor vehicle insurance, is up 20% since last year on average. That means some is up 40 to 50, because if the average is 20, it's gotten really expensive. Repairing your vehicle, it's up 17% since last year. Those are the two areas that are still growing at a double-digit pace, which, man, I hope we can figure out a way to slow that down because it is getting very expensive. What decreased the most were eggs. Eggs have declined 20% since last year. So, you hear this old adage, prices only go up, they never go down. Not true. We've seen that with eggs. We've seen it with televisions, which are down 10%, airline fees down 13%, and utility, so gas prices. Not gas at the pump, but natural gas prices are down 16.5%. So there's some good news and some challenging areas. Not sure what's going to happen with car insurance or auto repair, but I do know from personal experience that those numbers don't lie. So I hope you have a great day, and we will see you on the next one.